And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Hello, everybody. Welcome to the Coach's Playbook. Today, we got a wild whirlwind of a show for you. We're talking about low VIX. Well, you might be saying, now that doesn't sound super interesting. You know, high VIX, that's exciting. Well, we're also talking trading astrology later, so we'll get into what that is. But it is an important topic. Last week, basically, and into this week, the VIX is as low as it's been since the halcyon days of late 2021, when the S&P 500 was 10% higher. There was times in 2019, 2018 where we were down around 12. We'll kind of go into what the VIX is all about and how that can affect your trading strategy. But first, I haven't asked, so this is going out on a limb. Nick,
I
do you have a trader shout out for us? Perfect.
I got you. We got a few, but top dog today, Kirshner Baptiste up $7,300. So really big day. Way to take advantage of the market movement today. Very happy for him.
Great job there. So we can dive into this I'll start by talking about what the VIX is. And basically, if you're not familiar with it, it's a measure of volatility based on short-dated options, 30 days out on the ES. It's also a futures product. I've never traded it. Mick could maybe talk more to that. But it is something important that it is one of the things I always have up on my quote board because it becomes very important, especially as it is rising. So I talked about the dip. We're in a low VIX environment. It still seems there's a lot of uncertainty about the economy. It's kind of this paradox going on where there's all this naysaying of, recessions coming. There's all this uncertainty, but at the same time, people seem pretty confident that things aren't moving so much in the next 30 days. Now, they've been kind of right for a little bit. Right. We have not seen much. As I look right now at my board, I got, the ES is break even, 10 points in the NASDAQ. Things are slow, but that can change quickly. So, Mick, I think I'll throw it over to you first today to talk a little bit about the VIX, and maybe you could talk a little bit about the futures too, because I'm not super familiar with that.
Sure. So the VIX, like you said there, it's the volatility on the S&P. I don't trade the VIX. I never have traded the VIX. It's a CBOE contract, aka Chicago Futures Exchange contract. So it's not one of the products offered by the CME exchange. The VIX itself is just on the S&Ps. There are other volatility indexes out there, or indices, I should say, around volatility. You have ETFs and ETNs around volatility, like VXX. There's a gold volatility index. There's a crude oil volatility index. These are things to, it's an indicator, something to pay attention to. In a bull market, when you have a pullback or a downturn, you will see volatility increase. In a bear market, if you see a rally, you will see volatility increase. And many people don't really think about that a little bit. I like looking at volatility. If it's not something it's something, the VIX is something that the whole world talks about. So it's worth keeping note of. You can also make your own assumptions on what volatility is. If you're someone that looks at average true ranges and, the average true range is expanding, you might be able to, correlate that to an increase in volatility for any of these derivatives that do track volatility. I don't have a lot other than that. It's something people look at. When you do see an increase in the VIX, it is, could be a warning signal for some people. to lighten up their positions and whatnot. And, like you said, Jack, for people that are, trading options and stuff, it might be a great opportunity to make some money. And I know Danny, in his experience with the bond market, they traded volatility. So I think he's almost better versed to go into more detail about that than I am. I've used it in a limited capacity, and people, and that's okay. That's okay for me and my trading and how I look at the markets. Other people use it as a tool in different ways. So it's just something out there.
As we bring it in the trading strategy, I think that there are ways that you can use different VIX levels to inform, similar to how you could use average true range to. You could use the VIX to dictate, have a really, what's the word that I'm looking for? Kind of a true gauge of what size you can trade, right? Like if you are someone that likes to have firm numbers that dictate your trading style, that's a good one to use. And just intuitively, so you understand what it is. If there's more uncertainty, say you were going to buy an option around the strike price 2 weeks out or sell it, the premiums are going to be much higher if people are expecting it to move a lot. So that's why the VIX it's a measure of that, basically. So it's going to go way up during times of, a perfect example is most of you traded through COVID in 2020, where the VIX skyrocketed to, I believe, if not its highest ever, very close to it. It would be tied with when Lehman collapsed, both calamities. The VIX high is never good news, especially when it's spiking above, in that case, up to 80 or something like that after Lehman. Low VIX, I would say, would be anything under 20. And we have been there for quite a bit. So, Ho, you've been through all sorts of trading environments. How do you trade when the volatility is not really predicted? So when the VIX is low?
I think I've always viewed VIX as a fear indicator. A high VIX, there's a lot of fear in the marketplace. Low VIX, low fear in the marketplace. I think you're going to see much more ranging type of opportunities when when VIX is under 20. When you got VIX over 60, you're going to see some bigger opportunities. You're going to see bigger ranges. It tells you that you're going to have to risk more if you're going to get into any decent opportunities. And those opportunities are probably going to be worth a lot more. So, the VIX to me is the fear factor. When there's a lot of fear in the marketplace, the VIX is naturally going to be higher. And that's usually to the downside. But sometimes if there's a bear market and you get some volatility to the upside, you're going to see a spike in VIX that way. So, right now, I think the VIX is telling us that there is a fair amount of greed in the marketplace. People are comfortable holding positions to the long side. And that can be a kind of another warning sign of a possible change in direction. When you get VIX, up around 80, there's a lot of fear in the marketplace. And, that can create opportunities for bargains as far as trading is concerned. But to me, it's always just been a measure of fear. Jack, you're absolutely right. There's a lot of uncertainty in the world and in the markets right now, but it doesn't seem to be affecting the stocks. It doesn't, the stocks aren't really following the economy right now. But when it does, or if something changes, you're going to see that change in the VIX. As fear comes into the market, VIX is going to skyrocket.
And it always explodes much faster to the upside than it does to the downside. I know what I want to have Dan talk about next, but I just wanted to interject that in there. And it does make, when you're trading with a low VIX, it does make certain types of trading much more difficult. I know that was the bane of my existence when I was trading bond futures spreads, where you had to put big positions on because everything was so tight. It didn't move. It was just kind of super liquidity not going anywhere.
Yeah. To your point, Jack, before we kick it over to Dan, this would, for a newer trader, trading in a lower volatility environment could be a great time to actually, get yourself introduced to taking risk in the marketplace, as opposed to a high volatility environment. You don't want to learn the hard way by losing any cash quickly. So maybe, moving into markets and trading markets, getting familiarized with participating and taking risk And a lower volatility environment would be something I'd recommend for traders out there.
Yes. And the danger is that you sometimes do have to size up in these environments, and everyone's kind of sizing up. So it makes it all the more painful when something does dislodge. And what I wanted to talk to Dan about, because he did trade options, is the idea of selling volatility, right? That many people out there make money for many years selling volatility, basically. And then
Short
that
the
blows
premium.
up so you tell us a
It's
little bit about that.
It's always a good win. Well, first off, Jack, I just want to touch on something you said. There's sometimes you have to size up in these low volatility moments. You do not have to size up just because volatility is down. So, when volatility is down, a lot of people are looking for a P&L, and that's one of those indicators is like, how am I doing based off my P&L? That's not going to be the case, right? When volatility is down, we talk about ATRs, average true range, like that stuff starts to tighten. It really indicates what your profit versus risks are going to be in each and every trade. Doesn't mean you have to size up, look at everything on a ratio standpoint. And, if the market's moving 50 handles in a day, how much of that do I need to capitalize on to be consistent over time, right? There's a lot of other ways to look at it. So you don't always have to size up. But in regards to the option side of things, everything we did is based off of volatility. So when volatility is low, spreads tighten up, the premium gets smaller, and the possibility of making money dwindles. And so over the last few years, we've seen premium, volatility increase. You talked about it, Jack, pre-2020, pre-2019, the VIX was trading 8s to 12s. It was quiet, which means our premium was much smaller. So your area to make money was tightened up. So as volatility increases, that premium opens up and it creates more opportunity to make money based off of which direction that market's going, whether you're buying calls or, selling puts, things of that nature. So there's a lot of opportunity inside of it. But in reality, what it comes down to on the option side is volatility is going to help indicate what your premium is and also help you kind of put your plan together. So on the option side, one of the big things that you do as an options trader, and not just, going to buy some puts on, Tesla or something like that, but rather like position sizing, is you run theoreticals, and you have a theoretical based off of every strike price at a certain volatility and what you're willing to pay versus what you're willing to sell it at. And so your theoreticals are based off of volatility. So your whole strategy comes down to what you set as your volatility index or your volatility metric. That plans everything out for you. Now, historically, when volatility is moving, those theoreticals are changing 10, 12, 15, sometimes 20 times in a day. Hogue, you may remember the days of sheets. So the firm I worked for had their systems, they did not like the modern day technology, and we ran sheets. So I lived off of these sheets, and they were 18-inch long sheets. So they were extra long, and you'd fold them in half, and you're the whole day, and you're running off like a one handle range or a two handle range. When I say handle, that's, going from 133 to 134 with all 32 ticks inside of that. And you're running your puts and your calls at it. And so volatility really determines everything that you do on the option side. And I mean, you'd sit there with your theoreticals and you'd run theoreticals, and then you'd monitor your volatility. And if volatility changes, you're on the headset with the clerk. Hey, run the volatility. It's now this, and rerun it. I need new sheets, run volatility moved. And so you're running them all day, and then you're adjusting your position off that. I mean, it's kind of confusing. It's not something I can explain in a 5-minute session here.
Yeah.
But the core being on the option side, especially for us in the treasuries, every decision ever made was based off of what volatility is doing, because we traded premium.
Yeah.
Premium is where the money was at.
Right. And it dictates your size. So I have a question from the comments I'll get to quickly, but first I would just like to emphasize maybe the biggest takeaway for your trading. This just applies all over. Adding size is something that happens gradually, because the VIX will tend to decay slowly, but that's a good idea. As long as that's that and you're having success P&L wise, you can slowly increase that size you're trading. But if the VIX explodes by some amount, that's when you got to cut size very quickly. Add size gradually, cut size very quickly. We have a question from the comments. Says, is a low VIX environment does it coincide with a volatility crush? Well, there's similar phenomenons. When I think about a volatility crush, I think about that usually more in terms of if you were buying or selling options on single name stocks and there's an earnings report. So a volatility crush is the reduction in implied volatility of an option following a news event. Dan, am I right on that?
Yeah.
Close enough.
Close enough, I think.
So that'll be less on the VIX because it's the whole index, but there absolutely are events. The premiums will reduce following an unemployment number. It's just like, think about if someone's going to sell you an option on something, you're of course you're going to want more premium with the more unknown. So right before an unemployment number, before CPI, I'm going to need a lot more premium to sell you an option. So that is like the volatility crush. Another weird phenomenon is that the VIX tends to lower a lot of times towards the end of the week, like a Friday, because so many options the decay of the options is very quick because there's more that expire on Fridays. So there's a lot of little things here, but I think for most traders that are trading indices outright futures, the big thing is knowing what the volatility is and using it to inform the size that you trade. So any other thoughts on VIX trading, Dan?
Yeah, I was just going to add, it's important to recognize with VIX, right? The VIX, it's a heavily option area. From a futures standpoint, what it's really going to do is, number one, it's a laggard. It is not going to indicate that, okay, VIX just, skyrocketed, stocks are going to tank. It's a little bit of a lagger. So once that stock market starts to move, that's when fear starts to increase. So the VIX isn't going to be your indication. Rather, it's a confirmation maybe. So if you see movements start to happen, you can look at the VIX, right? If you're a stock trader, right, and you're trading the NASDAQ and you see the NASDAQ drops 100 points over like an hour and a half, right? You may think, oh, fear has set in. What's going on? If you look at the VIX and the VIX is really unchanged, that could be an indication that, oh, this is actually okay. Nothing crazy is happening here. If you see that VIX start to move higher and take off to the upside, then that may mean, and again, nothing is finite. Everything changes. There are no guarantees in any of this, but it may mean the stock market is looking to continue to break if that VIX starts to move up. If it doesn't mean the stock market can't keep going down, but it may mean that there's less fear. And then this is an okay thing. And then you have to go figure out, well, why is it still moving? What other factors are out there right now causing this?
The vast majority of the time when the VIX is rising, it's going to be the equity indices are going down. An interesting situation that happens far less frequently, but we could see it happen here at some point, is when the indices are rising and the VIX is also rising. That would signal to me that there is a lot of maybe not trusting in this move. I feel like we saw that happen back during sort of the height of meme stock mania, where asset prices were kind of going through the roof based on a lot of options gamma hedging, and things were going up. But if Tesla's up 500% in the last month, right, you're still going to want more premium, even though it's going up, because it's just, well, when is this going to collapse? And that can happen in the indices too. It's just a more rare situation, but something to watch.
Right. Proportions are never 100%. You can look at it over the 90-day, the 180-day, the 360-day, the 30-day proportions. Nothing's ever 100%. So there are times that, hey, maybe it's inversely proportional a majority of the time, but you're never going to see them 100% inversely proportional. There are times when they move together.
Yeah. Well, if you want to ignore the VIX being low, we did have at least one paper shared with us that said the entire economy is going to collapse within the next 2 months, which brings us to some trading astrology I wanted to discuss really quick, because I had never seen this before. This was a new one to me. First, do we have any astrology people here?
No, Jack, you're the only one that's going
No.
to talk about this. Mick has a song.
So listen, I'm not, there have been people in the office, like I'm certainly not. And remember, we're not talking astronomy. Astrology is kind of, your your zodiac signs and using the stars to predict stocks. And JD was kind enough to share with us this article written by a guy that does financial forecasting based on the zodiac. And I actually, I looked at his page. I'm not going to name this person either because it seems pretty. He's got some hot takes for beliefs. So I don't know if I want to amplify
It's
that
out there
here.
with the stars.
Yeah, exactly. So
Mick, you've got something to share with us.
Yeah.
Well, I can go there, but maybe Jack wants to talk on it a little bit more, and then I'll talk I'll speak my piece.
I just wanted to say that it kind of shows that it really is, there's all kinds out there in the markets, right? There's people who are looking at a little bit of everything. And I don't think your strategy should devolve into doing star charts, because frankly, that is silly as hell. But there are people out there that sometimes you got to go pretty far out into the weeds to find something unique, something that only you have. And there have been people from time to time in finance that have found certain things no one else was looking at. So keep looking, everyone. The truth is out there.
To know. I keep track of the cycles of the moon. I think the moon does affect people, and anything that affects people is going to affect the markets. Now, have I been able to quantify or take advantage of anything like that? No.
So which is better, like a full moon or no moon?
I like the full moon. It lives in my backyard. It's usually pretty and makes me stay up late. But
He's out there howling at the moon.
I'm out there howling at the moon. Yeah, sometimes.
So is that the basic idea, that sort of the lack or quantity of light can affect people's moods?
I think it's the gravitational pull. There are those that say, and if you've ever known anybody who worked in a hospital or where they have babies, they say women go into labor more often during a full moon than any time of the month because of the gravitational pull.
So maybe there is something to that, like maybe some connection between the moon and interest rates, or what Bullard's feeling at any moment. Mick,
I'm gonna get this over with because Hogs, want me to say it. You have heard me. For those of you that watch, I have mentioned the term, let a couple stars align. If you get double confirmation or triple confirmation for your trade, but always important to pay attention to when the moon is in the 7th house and Jupiter aligns with Mars. Peace is going to guide the planets, and love will steer the stars. That's the dawning of the age of Aquarius.
That's good, Mick. Is that your karaoke song?
It could be. My other one is my preposition song, which I'm not going to get into on this segment.
I'm just impressed. The words to that song, Mick. That's amazing.
Yeah. I definitely, probably not our viewing demographic here would understand what I was talking about, but
what is that? Is that from Hair, or what's the
actually? Yeah,
it's
in Hair. Yeah.
And I don't know Hair, but yeah, it's the dawning of the age of Aquarius.
Well, that makes it all the more fascinating that you know that lyric.
Yeah.
Dan,
I will say, at the end of the day, whatever your belief is or whatever your validation is for trading, the markets are the true indicator. They're going to tell you what's right and wrong. Don't marry something just because you have this, whether it's astrology or the cycles of the moon. The market's going to tell you, and you should have a trading plan that protects you. You should always be conscious on your risk, and you shouldn't overextend yourself, no matter what your belief is. I think everyone looks at things different. I'm not saying looking at astrology is not the right thing to do, and I'm not going to say it's the wrong thing to do. But the market's going to tell you if it's right or wrong. And don't put yourself in a position that you can't take. You're overextended, you've taken too much risk, and now you're in that odd situation, which I'm sure each and every person here has been in, where it's against you so much, you don't want to take it off because you just don't want to accept the loss. Mm-hmm. So you continue to ride it. because of some random belief that now has led you into this really difficult trade. And you sit there and you continue to watch it go against you. And then you go, okay, if it gets back to down X amount, I'm pulling it. And then it gets there and you're like, okay, I gotta go a little more. And then it shoots back against you. Don't let any of these beliefs lead you into that. Always have a plan of how to protect your risk no matter what, even if, you know, this astrology paper is correct. Great.
Well,
But
not great.
Well,
when we were
not
talking,
great.
when we were talking about this astrology topic, I was like, you know, what the hell am I going to say about this? I couldn't help but think like, as I look out at LaSalle Street from the Board of Trade building, they used to say with the grains, you know, anytime it rains on LaSalle Street, the price of, you know, wheat, corn, and beans go down. And then I was thinking about other stuff, and there used to be, and I couldn't find the website anymore, but there was in the wheat markets, there was this day that was called the Day of the Tomb. And I can't even remember why it was called the Day of the Tomb. And I couldn't find the website, but it was basically once a year, there was a single trade date or calendar date that wheat would always rally. And in my experience of watching that market, wheat sure enough did always rally and close higher that day on the Day of the Tomb. But because I can't find the, you know, the cheesy cartoon website that it was, you know, I'd love to share that, but it was kind of funny. It was a weird website, but it was true. And, you know, that was kind of just something that popped into my mind as I'm thinking about this astrology and trading stuff.
We'll have to post that somewhere when you find that. Well, we got a new moon tomorrow in Chicago, a good moon or a bad moon rising. We will see. Dan, do you have a quote for us, or did you want Mix Aquarius to rule the day?
I'm going to let Mix Aquarius rule the day.
Yeah, that is your quote from the musical Hair. So
My
that's it for this
contribution.
week. Yeah, great contribution. We'll figure out that Day of the Tomb. So not much volatility now, but always will be in the future at some point. So size up slowly, size down aggressively when the time is right. We'll see you next week. Trade safe and trade well.
And be
Goodbye.
careful when Mercury's in retrograde,
Oh yeah, that's a
whatever
bad
that
one.
means.
Yes.
Whatever
Watch
that
out.
means.